welcome to Sectors Up Close. I'm Elena Casas. Today we're talking big tech, and my guest is Greg Hahn, CIO of Winthrop Capital Management. It's results week in Silicon Valley, and big tech firms hand in their report cards after a quarter that's seen growth stocks dragged down by rising interest rates and expectations that the US and the world may be heading into a recession. First up on Tuesday is Google parent Alphabet, down 30% year to date. Wednesday sees numbers from Meta Platforms, which has lost more than 60% of its stock value since it changed name from Facebook, pivoted to a focus on the so-called Metaverse, and started losing young users to TikTok. And on Thursday, Apple and Amazon report. Analysts have raised concerns the world's biggest retailer could be set to dial back sales expectations for Christmas as price-crunched consumers rein in their spending. Well, for more, I'm now joined by Winthrop Capital Management's Greg Hahn. Greg, hi, thanks for joining us. Is there going to be any good news in this week's tech numbers that could cheer the markets?
So we're constructive on Microsoft. Microsoft earnings come out tomorrow. We're looking at, I think, about $2 or 232 a share, and it's trading. It has the valuation is actually very reasonable at today's earnings level, at 25 times earnings. And the company has announced, a thousand employee layoffs. So we see expense controls in place. We like what they're doing with Activision. The cloud business is firing on all cylinders. So we really think that Microsoft has is teed up for a pretty good earnings report in spite of, a potential slowdown in the economy.
Across the board, though, with growth stocks, how much more damage could rising interest rates and rising yields do here?
Well, I think we're probably going to start to see a slowdown in the pace of increases. We'll see. We expect 75 basis points in the next meeting in the first week of November. But we expect to see that in December. Our base case is to see them dial it back, and it'd be 25 to 50 basis points, and then heading into next year, a more moderate level of increases or a hold. And I think global pressure right now is just real heavy on our Fed to slow things down, and the unintended consequence for fighting inflation may be breaking the capital market, and I don't think anybody wants to see that.
If you're feeling more bullish on growth stocks as a whole, though, I know you're not across the board. I mean, does it make sense still to talk about what used to be called FANG stocks as a sector?
Well, I think yes. I don't think that all of them hold the same potential. Microsoft and Google, Alphabet, I think we're very constructive on. Alphabet has earnings coming out also on Tuesday, but we do not think that Facebook Meta is investable right now. We think the business it's a mature business in the social media platform side. It's lacking a solution on the video on the streaming side that's meaningful for its ecosystem. And we think this launch into the Meta platform, Meta space, is a distraction, and it's not scalable.
You're certainly not the investor, it doesn't seem, not the only investor, rather, who doesn't buy the metaverse idea. But do you think that the company is in terminal decline? Where can it go from here?
Yeah, I think it is actually. I think it has strong franchises in Facebook and Instagram, but in terms of what it needs to do to compete in the Apple, Amazon, Google infrastructure, I mean, the YouTube platform has been strong for Alphabet. What we're looking for is Meta to come out with some type of solution other than Instagram that it can use from a subscription standpoint that it could compete. We don't see that. That's not the direction they're going. So it doesn't, for us, it's not investable. Even though it looks cheap, it becomes a value trap from the tech space.
What about the impact, though, of a potential recession in the US on some of these other consumer-facing giants? Do you think that people will still be buying Apple products and shopping on Amazon as they start to be more worried about the cost of living?
Yeah, absolutely. I think what's going to happen is we'll see a slowdown, and it's going to happen. We expect that's our base case, is to see an economic slowdown. The rise in interest rates have shifted the demand curve. So we're seeing beginning to see slowdown in areas that affect the consumer sector, particularly housing in the United States. It's going to happen. It's going to be a rough holiday shopping season, for that matter, I think. But through this, we'll get some retrenchment once the pace of inflation starts to slow, and we'll see some moderation in interest rates in the second half of next year.
And I know you mentioned you like Microsoft. What else would you buy in the big tech space?
So we're buyers of Google. Oracle came out with earnings last week. We like Oracle. They had strong earnings. We are not as constructive on Salesforce. There's an activist investor that got involved in Salesforce last week. We think that there's some goodwill write-downs that are going to take place, and that's going to be more impacted in a slowdown, especially in the business sector. And then on the chip side, we still like Nvidia.
Well, thanks so much for that, Greg Hahn, CIO of Winthrop Capital Management. Well, that's our roundup of the tech space. I'm Elena Casas, and this is Reuters.